Hi, thanks so much for joining me today. I will be providing an in-depth overview of Value Line Select Dividend Income Growth, one of our premier equity-focused publications. I will also recommend an income stock for immediate purchase. However, my goal today is to answer your questions about dividend-paying equities, dividend strategies, or questions that you have about Value Line in general, so please enter them into the Q&A feature. I will answer as many as I can following the presentation. Before I begin, for those joining us for the first time, I want to provide a brief overview of who we are at Value Line. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our research, which is created in-house by our staff of 70 analysts, economists, data experts, and quantitative specialists, is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company. Value Line does not execute trades for its subscribers, and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific security. Value Line will soon celebrate its 12th year producing our Dividend Income and Growth service. Published monthly, it is designed to help investors build and manage a well-diversified portfolio of quality stocks that are expected to provide above-average current income and appealing long-term dividend and growth prospects. Every recommendation is heavily scrutinized and hand-picked by the Value Line Research Department. Each month, regardless of the market climate, we provide a comprehensive report that includes our featured stock selection, as well as an alternative equity for investor consideration. Each report includes a detailed discussion of economic developments at home and abroad, and their impact on the stock market, a statistical overview of how each highlighted company's past and current performance, prospects, and other key data, a focused look at the recommended companies, their competitive advantages, as well as the catalysts and opportunities that should drive their businesses, detailed in-depth data on products and services, business strategies, and organizational structures, an evaluation of the corporation's finances, a review of earnings, and a discussion of factors unique to each company and industry. We also provide charts, graphs, a record of historical dividend payments, and detailed projections of future dividend levels. Tables updating our subscribers on current holdings of featured and alternative stocks with our bottom line buy, hold, or sell recommendations. Recommended stocks are then added to the Value Line Select Dividend Income and Growth portfolios. Our featured monthly choices are listed under featured, while our other highlighted stocks are shown separately. Let me touch on the selection process. Using a wide variety of criteria, including Value Line's proprietary, time-tested. I just wanted to show the portfolios while I'm reading. Here's our featured selections. Value Line decides on stocks that appear to possess the best income and business prospects and recommends them for purchase. The following variables are generally taken into account in the selection process: historical dividend policy, current dividend yield, projected annual dividend growth, Value Line's timeliness and safety ranks, company has a successful management record, company has a significant and firm position in its industry, company has a history of healthy top and bottom line gains and steady cash flows, stock appears undervalued or appropriately priced based on a number of valuation criteria, analyst estimates point to increasing revenues and profits supporting a growing dividend, and finally, cash flow expectations are able to easily fund operations and the dividend. Each new selection Value Line Select Dividend Income and Growth is then constantly monitored. At least once per quarter, the manager creates a supplementary report on each holding, informing our subscribers on what is going on with the company, its stock, and what it means to our subscribers. An updated buy or hold recommendation is also included in each supplementary report. These updates are available exclusively to subscribers on our website, www.valueline.com, for 90 days after being published. After recommending a stock, we don't leave you on your own. Value Line will alert you as soon as we decide to recommend that our subscribers sell a particular holding. Our reasons for selling a stock can vary widely, from an issue that has performed very well, where we think that taking profits is prudent, to a stock that has jumped in price because of industry-related or company-specific news. We may recommend selling a stock if a company's dividend policy changes. For instance, management mentioning that the annual payout will grow at a slower rate than what was previously expected, or not at all. Admittedly, not all of our recommendations will work out, and once in a while, we may tell our readers to cut their losses. When we recommend the sale of a particular stock, our subscribers will immediately receive a phone or email message detailing the reasons behind our view. The sell notification will signify our final review of that stock. We then suggest moving the proceeds to other buy selections. We apply our decades of experience to help you build your wealth. Value Line Select Dividend Income and Growth is available in both print and online and represents a complete investment tool for those who employ an income-based strategy. Now let's take a quick look at the website. Our most recent report is posted at the top, along with the most recent supplementary reports. Access to the full reports on those stocks still included in the portfolios can be accessed via the previous recommendations link. Looking at our latest report, we recommended Hormel Foods. Active subscribers, I'd like to jump in right here, should note that our next report, which of course includes 2 new recommendations and updates to previously highlighted stocks, will be released this coming weekend. As mentioned, the monthly reports contain a great deal of information, including economic commentary, updated portfolio tables, and of course the new highlighted stock. Hormel has now been in the featured portfolio for about a month, and we remain quite bullish in regard to the company's and stock's prospects. Hormel Foods Corporation is an international processor and marketer of branded consumer products found across the food service, food store, and supermarket sectors. Products include fresh, frozen, cured, smoked, cooked, and canned meats and other food items. Among the company's leading brands are Hormel, Spam, Dinty Moore, Jennie-O, Skippy, and Planters. In the midst of the coronavirus pandemic, Hormel stayed solidly profitable in 2020. With more people now becoming vaccinated and the macroeconomy reopening for business, sales have strengthened this year. Notwithstanding lingering COVID-19 related expenses, higher labor costs, and raw material price pressures, earnings have firmed and management expects a stronger bottom line performance. Demand is healthy, pricing is favorable, and supply chain issues are largely resolved. In addition to favorable recent results and business outlook, the stock has rewarded shareholders. In the 10-year period ending December 31st, 2020, the return was 323%, or 15.5% on an annualized basis. The annualized return for Hormel outpaced that of the Standard & Poor's 500 index by about 1.5 percentage points, and it was nearly double that of the S&P 500 Packaged Foods and Meats Index. Over the course of the decade through fiscal 2020, the company's sales advanced a solid average yearly rate of 2.9% to $9.61 billion, underpinning favorable net income and cash flow growth of 8.4% to $908 million and 7.6% to $1.1 billion, respectively. Please note that fiscal years end on the last Saturday in October. Share earnings increased at a rate of 10.2% to $1.66. The dividend progressed at a strong annual rate of 16%. Impressively, the company has raised its dividend for 55 consecutive years. Looking ahead to the 2024 to 2026 timeframe, we project average annual advances in sales, net income, and cash flow of 4 to 5%, 12 to 13%, and 10 to 12% respectively. Such a performance would support dividend growth of about 5% a year. The returns on total capital and common equity both appear poised to make visible headway toward a full recovery. We would not be surprised to see Hormel's stock break out of its recent flat performance and start to once again outpace the broader S&P 500 index. Hormel Foods, ticker HRL, earns a buy rating by Value Line. I hope you found this presentation interesting and informative. I will now tackle your questions. All right, I got a few emailed to me earlier in the day. I'm going to start there. I also see that there's several in the Q&A panel, which I will tackle thereafter. First question. I just became a Dividend Income and Growth subscriber and have reviewed the last few reports. I have not yet taken any positions in the recommended stocks, though. Any advice when it comes to getting started? Okay. There are presently around 15 to 20 stocks in each of the featured and alternative portfolios. We don't think there's any need to buy them all on day one. And there is no right answer here, but we generally recommend one of two strategies, either of which will enable subscribers to maintain a portfolio of dividend stocks. The first method is to focus only on the newest recommendations. Thus, simply purchase one or more of the most recent monthly recommendations, and going forward, consider taking a position in all new stocks or all new highlighted stocks. Another method is to review a number of historical reports and regular updates and purchase all stocks that currently hold a buy rating. Next question. How much does Dividend Income and Growth cost, and can I get a free sample? I'm going to pass on that question since it's really for our sales and marketing departments. I recommend you call 1-800-VALUE line for more information. Next question. What is the average turnover of the portfolios? So since we add a new featured and alternative stock each month, we don't want the portfolios to get too big. Typically, we sell just as many stocks as we add on a regular basis. Keeping the portfolios around 20 holdings each is the goal. However, we're not beholden to that strategy. Next question. What do you believe is the most important metric when searching for a dividend stock? I don't like to recommend focusing on just one metric. That can definitely lead to investment mistakes. For a short list, I would look at recent dividend growth rate, current yield, and the financial health of the company. Of course, to increase the probability of success, typically a deeper dive is necessary. All right, next question. How will the overvaluation of so many companies correct themselves? One large drop, or perhaps a longer term with decreased annual growth? A simple market correction, which is defined as at least a 10% decline, is certainly and of course likely at some point. Market corrections are inevitable. But another possibility is that we see only incremental gains or small losses for the major indexes for a couple of years until earnings catch up to stock prices. Personally, I think that last one is certainly possible for 2022. All right, so those were the email questions. Now let me go on to the questions from the Q&A. And thank you everybody for attending, and thank you for everybody who provided questions. First question, how should we interpret VL criteria and advice for a company like MasterCard? All right, well, we can take a look at Value Line's MasterCard report. I'm now leaving the Dividend Income and Growth service and going into Smart Investor, which is our flagship digital product. This is the 1,700 Value Line Investment Survey stocks. MasterCard is not a candidate for dividend income and growth. The dividend isn't nearly high enough. But right off the bat, by most Value Line criteria, MasterCard is being recommended. For instance, it carries our top scores for both safety and timeliness. Safety is our proprietary rating for the overall risk of the company. MasterCard is as financially strong and profitable as they come. Timeliness is our measure for the stock's relative performance over the next 6 to 12 months. One being the highest rating. So, according to our timeliness system, MasterCard will be one of the better performers. Moving to the 18-month target price range. At its current price, we are suggesting that there could be 30% upside over the next 18 months. That 30% is generated by taking the midpoint of our range and comparing it to the current stock price. This gets updated every day using the last daily market close. So for a quick snapshot for MasterCard, we are recommending it. Next question. I am aware dividends can be accrued through purchase of ETFs or individual stocks. What do you see as more advantageous for senior citizens like myself, 70 years old? So for somebody who is in retirement or presumably getting close, both can get you there. Buying the right ETFs or buying the right batch of individual stocks can get you the current income that you want and need, for later on in life. I will say it highly is dependent on which ETFs you choose and which individual stocks. Just because it's an ETF and it has, hundreds of holdings doesn't mean it's not risky or doesn't fit in your individual risk profile. The same goes for individual stocks. So picking and choosing would be the most important thing. For individual stocks, like MasterCard here, although for current income it wouldn't be a great choice, focus on stocks ranked 1 for safety. Those are the most stable companies under our coverage. Just to give you an idea, in our total database of 5,600 stocks, less than 140 are ranked 1 for safety. So those are the biggest, strongest, most stable companies. I would run a screen using Value Line to start of safety ones and then whatever the current dividend yield you require, 3% or whatever seems reasonable to you. For ETFs, we have an ETF product, and you can search for similar ranked stocks, similar safe ETFs, and ones that provide ample income. All right, next question. Is a subscription to the service discounted if you are already a VLIS subscriber? Possibly. We do often offer bundle rates and things like that. Again, that's a question for the sales team. Please call 1-800-VALUE-LINE. Next question. Are you saying Hormel's dividends are correlated to the company's annualized income? They're not directly correlated because the dividend has been increasing a lot faster than profits. But of course, our thinking is that as Hormel makes more and more money in earnings, that will make it easier to fund the dividend. They're related, but not directly so. Next question. Here's a competitive question. How does Value Line compare to Morningstar's research? You're not going to hear me knock Morningstar. They are a successful financial services company. They have similar research to ours. Don't quote me on this, but I believe our universe of stock coverage is larger than theirs. And I believe as far as physical numbers, our research department is greater. While they probably have a greater quantitative presence. I know a lot of subscribers personally who subscribe to both and look for companies that have, look for stocks that both services recommend. For more of an in-depth answer to that, I would suggest taking a free trial of Value and a free trial of Morningstar and find which one works for you. All right, let me see some more questions. Other than a dedicated report and VO recommendation for one top stock per month, is there any information in this service not found in VLIS? So I'm assuming the question is specific to dividend income and growth, and the answer is yes. The analysis and recommendation for the stocks within dividend income and growth is unique to that product. The managers of that service look at each stock not just on its own merits, but also as a member of that overall portfolio. So you will get unique analysis. It's not just repackaged VLIS content. So to, I guess, go the next step, if you are a VLIS subscriber, there is certainly added value to being a dividend income growth subscriber as well. Current views on MO and PM given the U.S. ITC ruling. So those are the big tobacco producers. Not two stocks that I cover myself, so I'm no expert when it comes to the tobacco industry. But I will say, up until today, Altria, ticker MO, was in the Value Line Dividend Income and Growth Service, and we recommend that it be sold because we no longer are as optimistic in regard to its prospects. Next question. With inflation looming, does dividend income and growth include selections that might fare better in an inflationary environment? Yes, absolutely. One of the criteria that we look for is for the stock's current income as well as its dividend growth prospects to be above our expected rate of inflation. So we want not just current income, but we want more current income as spending power potentially declines. Is your monthly stock pick geared toward younger, middle-age, or senior investors? I think that makes a difference given the remaining lifespan involved. So there are certainly, an individual's risk profile and, of course, investment horizon and time frame that goes into every choice. But our picks should fit the criteria for all three of those groups, assuming the strategy is current income and dividend growth. Perhaps as you get into retirement or closer to it, some of the stocks may be a little riskier, so you might want to trade out of those to more of the ones that are ranked one for safety, or cash flows cover dividends X times over. But an investor at any age should be able to find a group of stocks within dividend income growth that fits their criteria. Right, next question. What is the definition of dividend yield? Can you break this down? Sure. So there's several dividend yields that appear in the report. The one that we use most heavily is our estimated dividend yield, which is the current stock price divided by the next 4 expected quarterly dividend payments, and those are our estimates. We also provide the trailing 12-month yield, which is the last 4 payments, but we think the forward yield is far more important. If you're buying the stock today, the dividends from the past 12 months, it's good information, but it's not what you're going to be paid or you should expect to be paid. So we use a forward dividend yield, or at least weigh heavily the forward dividend yield. What is the difference between dividend income and growth and portfolio 4? Okay, so both, for those of you that don't know, portfolio 4 is an actively managed 20 stock model portfolio that's part of the Value Line Investment Survey and Smart Investor subscription. It holds 20 stocks for current income. So it is most focused on the current yield of a stock, using the forward dividend yield that I just explained. You get an update each week. Each write-up is a few hundred words, and the performance has been quite impressive. Dividend income and growth does a lot of those same things, but you get a whole lot more information. As I said, you get a few hundred words on portfolio for a week. For dividend income growth, you get a 24-page report or 20-page report every month, supplements every time there's an update. For income-seeking investors, for people who want an active strategy, dividend income and growth is the more robust product. Here's a question about Hormel's PE of 29. So if we take a look at, Hormel Foods' Smart Investor report. So on our last report, the PE was around 27. It is slightly higher now. As you can see, the median is 21. Let me make that a little bigger. The median is the average over the past 10 years. So looking strictly at the PE, this stock is trading at an elevated valuation. But so is the entire market. So we don't think its current PE relative to the overall market is a concern, and it is today's one income stock to buy right now. Does VL offer ETFs for income and growth? Yes, Value Line has 2 ETF products. The first is the new ETF service. That is a screener-based product. Every ETF that is listed in the US is on there, and you can create customized screens to search for ETFs that fit your criteria. So I'll quickly open that up. It's being difficult. Stand by, please. Try it that way. Well, that's loading. I'll talk about the other one. The other product is Value Line Select ETFs. And this works a lot like dividend income and growth, where we recommend 1 ETF per purchase each month and then provide ongoing analysis of those stocks. Some will be for income, some will be for more growth oriented or more aggressive. Here's the screener for the ETF service. So you can use Value Line's proprietary ETF ranks. And there's a few dozen criteria. So should be able to easily find dividends to your liking. Your forward yield is your dividend payments. So maybe that's the field you start with. But we have a wealth of ETF content. Next question. Oh, there's a lot of questions, so much appreciated. Have you noticed that there's a market, or when there's a market correction of say 10%, have dividends gone down also, or pretty much held? The major indexes going down in value doesn't directly trigger, dividend cuts, but there's usually a reason for when the market goes down. So, for instance, when COVID-19 hit last March, the market tumbled, and of course that led to all these businesses closing or pivoting to work from home, or not being able to work, and of course countless companies cut their dividends. But it's not directly based on just stock prices going down. Next question, how do you screen for safety one stocks? All right, so we're taking quite the tour of Value Line's website. Under Find Ideas, you'll be able to find Value Line Screener. This is, again, part of the Smart Investor subscription. I don't know why this is going so slow. You can also access it from Browse Research. And here's your screener. All of these fields are available to retail subscribers. There's also a couple hundred more fields that are available for higher level subscriptions. Under ranks and ratings is the safety rank. And to find the safety ones, all you got to do is click on one. And 138 stocks meet that criteria. All right. All right, here's a comparison question about Value Line Select and Value Line Select Dividend Income and Growth. The difference is objective. So we've obviously been talking about dividend income and growth at this point, and that's the objective, is current income and companies that we think are going to increase their payouts. Value Line Select is looking for more aggressive companies and price appreciation. We may very well highlight dividend-paying stocks in Select, but that's not one of the main criteria. We're looking for stocks where prices will go up, not necessarily will pay you current income. But both products are similar in the fact that they recommend new stocks every month. All the stocks go into a portfolio. We provide constant updates. So they're both full solutions, just depending on what your investment objective is. All right. Here's a couple questions about how often these webinars are hosted. We do one every month. Sometimes we'll do more of a Q&A or product-focused webinar like today. Others are more take you through what's going on in the current market, coming up with an investment strategy, and finding stocks that meet that strategy. Does Value Line provide training for new subscribers? We have a host of user guides and video tutorials that are available via the investment education section of our website. Also, your sales representative will be able to help you if you have specific questions. A lot of those questions do filter to the research department and myself specifically. Well, will your timeliness and safety ranks be different between a VLIS subscription and dividend income and growth? No, the ranks will be the same, but sometimes our analysis and recommendation will be different because in dividend income and growth, as I mentioned, it's one stock in a collection of a portfolio. So we might recommend selling a particular holding if the dividend doesn't match up with our preferences anymore. that has nothing to do with necessarily safety and timeliness. So for Dig, you're getting, a portfolio overview, not just a, hey, here's one stock recommendation. Has there been a situation when no new stock was recommended as nothing better was available? No, we recommend a new featured and alternative stock every month, regardless of the market environment. All right. This is a follow-up to, it looks like a follow-up to the question about when the stock market goes down, does it lead to dividend cuts? Let me read that question. When the market suffers a major correction of, say, 30% in response to some economic events, many companies cut dividends, like we talked about with COVID-19. But does your research show that well-financed companies are on your list generally hold their dividends, thus keeping the income stream steady? Yes, that's why we're very choosy when it comes to picking these dividend stocks. As I mentioned, some of the criteria used, we won't pick stocks that have a history of dividend cuts or stagnant dividends. We rely heavily on evaluating companies' balance sheets, cash flows. The goal is to pick stocks that are not going to cut their payments if there's some adversity. That is the goal. It's hard, but it is definitely a prime criteria for picking stocks within dividend income and growth. It appears to me that dividend income and growth service is probably the most valuable tool for seniors of all VL products offered. Is that correct? It's definitely in the running. Since these are typically big companies that pay steady and growing dividends, there's definitely a draw there for older investors. But using the screener and using other products that Value Line offers, if you want a more hands-on approach to do the research yourself, there are certainly other tools at your disposal. All right. Does Value Line, this is actually the last question. Does Value Line publish performance records for the dividend income and growth portfolio? Within the monthly reports, there is a portfolio overview where performance figures are discussed. So within each report is a stock selection updates. These are information about the stocks currently in the portfolio, and we provide performance figures there. All right, that's all the questions. Thank you for all of them. That was fantastic. I hope you got something out of this presentation, and thank you very much. Take care.